Hello and welcome to Trading Growth and Value Stocks. My name is James Boyd. Happy Wednesday to you. Today's date, June 25th. Let's go ahead and get started. If you can kind of hear it a little bit, I do have a cold, which is really odd because it's been almost 100 here in Salt Lake. Go figure. We have Connie Hill in the chat. We welcome her, and we welcome all of you here today. Life in the Fast Lane, JP, Fayez, Sandy, Scott Luck, aloha back to you, and many others. Welcome to all. Now, this class, we really talk about trading, growth, and value. Sometimes you see kind of more growth stocks leading the charge. Some other times you see income kind of leading the charge. And other times you see value kind of leading the charge. Now, quick heads up. You actually said, well, how can I actually find that out? On Friday, Kevin and I, and by the way, Connie teaches an ETF class as well, where we talk about different products that track a grouping of stocks like growth, like income, like value. And you can just put them in a watch list and see statistical returns, or put them on a chart and actually see which ones are leading. We'll get to that in just a moment. But that's how you want to kind of really assess what's kind of leading and where is their potential. Now, also remember, as we get started, remember that Connie and I, we do post educational content on X. And also this webcast is being recorded. So just real quick as we get going here today, want to give us a quick reminder that it's done for informational purposes only. Should not be considered an individualized recommendation. Schwab does not recommend the use of technical analysis as a sole means of research. That's a way to look at it. It's not the only way. The paid money software application is provided for educational purposes only. And also remember that investing in stocks involves risk, including loss of principal. Now, quick reminder that coming up this weekend on June 28th, we're going to be in New York doing what's called a market drive, a one-day event. You can also go to schwab.com/events and register. Typically, if we're inside 90 days to the event, the link will open to register. We will also be back in New York on August 8th and 9th, okay? That's technical analysis and option strategies. Day 1, technical analysis. Day 2, option strategies. And in Chicago, the 15th and 16th. So if you're a Schwab client, which I imagine you are, you can actually attend for free. So check that out. Just go to schwab.com/events. Now, I want to kind of talk about just real quick where we're kind of seeing some of the opportunities right now. We'll talk about from an index perspective, a price perspective, and also a sector perspective. Got a number of stocks here today that we want to look at for potential candidates for the paper money portfolio. So let's go ahead here and just kind of hop right in. And first off, let's go just real quick to just, I'm going to come back to the dollar in just a second. But if we were to look at, let's say, the SPX, let's start here. You're going to see that really yesterday, we actually closed outside of that level of resistance of the 60.42. Now, we talked about this quite a bit. Usually on that day 2, there tends to be a red candle. Is the red candle below support? And the answer is no. Red candle just means it's currently trading lower than where it opened. How low is it? Well, it's pretty much a neutral day from where it was yesterday, okay? So a lot of times red candles, they're not the same. Sometimes you can just get it slightly down. It's barely down. Now, if you look at this, clearly the technician wants to see the price stay above 60.42. You also got to remember something. If we're seeing that the index is leading to the upside, and we went to the market watch and we went to quotes and we pulled up a list of sectors, it would not be stunning to actually see some of those growth sectors leading the charge. At least you'd want to see that. Now, if we kind of looked at this on a 1-week basis, well, what do we actually have? We include semiconductors in the indexes. Sometimes they trade like a sector. The SOX leading the charge. And by the way, the 1 month is blistering. Don't even look at it, okay? Joking. Now, if you take a look at, let's say, the technology, 2.5%, 8% for the month. Financials up in there. You're going to see the communication is up in there as well. So the top really 4 is kind of what you'd expect, okay? Communication, financials, technology, and semis. We're not, and you see that if we look a little bit less, industrials, kind of mid-beta, if you will, not as volatile. Discretionaries, that has not been getting the love compared to technology, okay? And so the worst performing one for the week, energy down 2.71, And if we look at for the month, it's 4.42. Okay. Now, if we're talking about kind of relative strength, another way to kind of see where that push is coming from, the strength we've actually had has been coming through the tech and the semis. Okay. And you take a look at also the communication, it's up in there as well. The financials have been really moving from right to left, getting a little bit more green here. Okay. Not unusual. Okay. Now, in the market environment, when markets go to the upside, those areas like utilities, staples, healthcare, non-biotech, they tend to lag. It's not that they don't go up per se, they just tend to lag. And we see that, okay? Now, when we also go back to just real quick, now, by the way, if we could, which we can't, we would like to add to this list like, hey, what is a ticker to where we could track growth? What is a ticker that we could track a grouping of, let's say, dividend stocks? What is a ticker that we could track maybe a group of value stocks, okay? Whatever criteria that is. And then we can kind of look and see the same idea. Where's there some more strength? Now, if you did that, it'd be pretty apparent that you see growth leading the charge, hence the sectors. Second would be income, and third would be value, okay? So what a shocker here today that we actually might talk about a little growth. Now, I do want to kind of point something out that we've actually seen here today that's gotten a little ugly, okay? Now, we know that when we talk about investing, you can't invest with Post-it notes, okay? You can't invest with Monopoly money, right? You need cash. Now, that cash can be US dollars, Canadian dollars, euros, right? And what we're seeing actually here is that continuation of that pattern of a descending triangle on the US dollar, okay? Now, remember, if this is going up and Fayez lives in Canada and he's sitting in Canadian dollars, and I don't know if he is, but the biggest actually thing is some of these other currencies are benefiting from maybe some of the dysfunction that we've been having here in the US. I mean, you can call it different things. We'll just call it a little excess volatility, dysfunction, whatever you want to call that. Now, we see the euro going up, the Swiss franc actually going up, and the British pound. Now, remember, if we talk about the US dollar actually going down, we're also going to keep an eye on, let's say, copper, okay? That's probably the precious metal that might be the closest to be getting a little push to the upside. This also might kind of create some support levels underneath gold, the price, and potentially even, let's say, some gold stocks. So keep an eye on that as well. Now, what I want to now do is I want to kind of talk about just real quick some examples here. Now, when we talk about, let's say, looking at some stocks, I want to go to the Dow list for just a moment, okay? When we look at the Dow list, and I like to kind of just rank it by the week percent, okay? Or I like to look at this in terms of the RS5, okay? Now, if we look at the RS5, you kind of see that there's a bunching of stocks, okay, that are kind of really in that green color. Now, whenever we show this, this is showing historical up till now, what the relative strength has been of the stock compared to the S&P 500. This is not implying that the future is going to be the same, but we're just trying to find some trends, okay? Now, stocks like a Cisco, Goldman Sachs, Home Depot, JP Morgan, NVIDIA trading at the high of the day, semiconductors, and Microsoft, etc. You're also going to notice in there American Express as well and Caterpillar, if we're just talking about the ones that have really been in the green, okay? Now, what I want to do is I want to kind of also bring up one of the stocks that has been in there, which is Disney, okay? Now, I will show you a couple of these other stocks up top. We have many of those in the paper money account. Let me just show you a couple, okay? So NVIDIA today here, gapped to the upside. And I'll zoom back in on this to kind of show this. If we look at this, what we've been taught, right, is we get a down day, close higher day, okay? And then you get a gap. Now, if you gap up, some traders trade that gap. Now, wonder if they're not there in the morning. Wonder if they work in the morning or whatever, okay? Or they don't use mobile, okay? Well, might want to consider using mobile since, technology is there for a reason. But what you're now going to notice is that gap, we really held that old gap up price was really the low of the day. Now, wait, is that bullish or bearish? If you gap up and that gap up price was the low of the day, would you say that's bullish, indecisive, or bearish? Well, many investors might say, James, my gosh, you gap to the upside, and that's pretty much the low of the session, and we close up near the high of the session. Many investors like to see that. Now, good technicians that have an understanding of bounce setups, they understand that, and they try to trade that gap. That was an entry. Another entry would have actually been this morning, right? Trading a gap. A lot of times when we see gaps, we're kind of like, oh, it's scary, it's scary. They're not necessarily looking at the gap per se by itself. They're saying, how far are we off the moving averages? And so that way they can assess how far are we. Now, many technicians, they like to kind of say, look, are we more than 3% above the moving averages? If the answer is no, the gap is not as high as you think it is. If it's 3 to 4%, it's a little elevated. If it's 4 to 5%, it's a little bit more elevated. And if it's 5% plus, that investor might say, I'm going to try to do a buy limit order or set an alert. But if you look at where we were this morning and actually say, well, how far were we off that moving average? The answer is barely a percent. Be very careful in just looking at the chart and then making the determination that the gap looks huge. Measure it, okay? It was 1% higher than the moving average. If we took the 20-period moving average, it was 1.55%. So now what you're going to notice is on Micron today has earnings. And we're going to see if Micron can get a little gap. It's ripped to the upside. High expectations. Can they fulfill that expectations and even just hold? If the stock goes down $3, $4, $5 or so, some investors might be profit taking. We saw that same behavior back here. And what you're going to notice is it rallied up until earnings. It sold down for about 36 hours and then put its foot in the ground and said, going to go higher. Okay. So we know around earnings that some investors like to step out because that's what their target date was. They got in expecting earnings was going to be X. If it fulfills that, some of those investors might be moving the money to different trade ideas and or investments. Feel bad for the people that actually thought that was the high. Okay. It wasn't. Okay. Now, the biggest actually thing is, I'm going to go back to Cisco for just a moment. Cisco has been the one that we've actually had in the paper money account that really actually has had a nice continuation to the upside. The fundamentals on that, just quickly taking a quick peek at that annually. The earnings per share is not like blowing the doors off per se. It's really the sales per share, revenue divided by sales, shares outstanding. It's actually a little bit higher. But what you're now going to notice is kind of a pretty healthy ROE on Cisco. Not necessarily one that just pumps $5 in a day like NVIDIA or Netflix, etc., but just kind of grinding higher. And sometimes those can actually be the ones that could be that can just trend and kind of fool investors to think, wow, it didn't really look like it was going up that much, but it just kind of kept going. And what you're going to notice is on many of these stock charts, the famous V pattern, okay, which sometimes can be some of the strongest continuation patterns out there. Could they hit those targets? Now, I want to also go back to just real quick American Express. Now, let's say the investor said, hey, James, saw the breakout yesterday. Today's a red candle, it's bearish. False, okay? The red candle does not breach support, okay? Red candle just means we closed down a whopping 36 cents or a tenth of 1%. Okay. So if you're not looking at the support level, you're just falling into the trap of looking at the color of the candle. Okay. Now, one of the reasons why we're kind of watching American Express is this one has actually been one, if we talk about sales per share, it's really been off the hook. Okay. And those sales really over time, which should go up based on inflation, okay, you're going to see that it's been going up over time. Now, what you're also going to notice is if you like dividends, which we know that dividends are not guaranteed indefinitely, they can change. We're actually going to see that over time, those dividends have been increasing, okay? And you should be aware of like what type of dividend policy do they have? Do they just pay a fixed amount? Is it really based on a certain percentage? What? Okay. But overall, grinding higher. And then earnings per share, if we go back to 2020, 377, smashed it and about doubled it, tripled it. And you're going to see that right now they're almost at a triple where they were just 4 years ago. Now, remember, if you want to kind of see this on a quarterly basis, pull this up, and we can now see these numbers for Q25. Okay. Now, what I want to do is, how many of you have ever missed a breakout and said, geez, I'm going to have to wait for the next one? Well, really what the investor might want to learn from that is like, hey, I missed maybe a breakout day, but if we have a stock that's breaking out, it's probably going to give us another opportunity to try to get in. So one thing that the investor wants to be made aware of is, how do they actually set an order that if we go down closer to support and or if we actually go down, if we go above today's high, get in? So it's really one or the other. Okay. Now, I think if you ask many investors, how many would like to buy at a lower price? They put their hand up. How many want to buy at a higher price? And the answer, hands go down. The investor's trying to do both sides of that order, lower or higher on the price, because they're hoping potentially the price goes down, but they don't know if it's going to. Now, what I'm going to do is I'm going to mark on this chart 305.74. 305.74 is right at the middle of that green candle, okay? 305.74. What are we going to do with that? Well, we're going to type in 305.74 and say, look, if we come back to down to the middle of this green candle, we're going to try to buy on the price dip in this example in the paper money count. What's today's high? Today's high, 310.77. Now, just example given that we've kind of practiced for 20 plus years, we're going to take 310.77, add 20 cents to that, and it's going to give us 310.97. 20 cents, 25 cents, 0.5%, 1%. It's really, you're just kind of trying to put an order. Now, if you were to ask me, do you like to use a dollar amount or do you like to use a percent? The answer is a percent, because a quarter on a $300 stock is not the same thing as a quarter on a $40 stock. Okay. So I think as a group, we might say percent might be a little fairer, but I'm going to stick with kind of what we talked about so far. But if we kind of want to do, we could kind of say, hey, I'm going to do 0.5% above today's high, 1% above today's high. So these really mark where the entry is going to try to be made. Now, how do we do it? Now, what we're going to do is going to right click on the chart, go down to buy custom. Okay. And I'm going to pull this up, buy custom, go to that trade right there, pull that up, paper money count. And what I'm going to do is just type in AXP. And what I'm going to do here is I'm going to right click on the price graph, okay? Buy custom with OCO bracket. Now, when we do this conditional order, okay, we're going to put on this conditional order, we're going to go limit to a market, a conditional order, okay? Meaning do not fill unless one of these two conditions is met. So we're going to go market data GTC. Click on that, click right on that little gear right there, click. And what I'm now going to do is slide this over, okay? Now, if we went back and said, what was that low price? 305.74. Now, if you don't mind, I think a lot of people might say, James, I'm going to put the highest price up top. Mentally, that might make more sense. 310, okay? At or above, greater or equal to 310, what, 97? Yep, 310.97, okay? Now, wonder if you would have done this in the last 2 months and you would have put buy stops or conditional orders if we went at or above the highs. That investor might have been able to ride some of the upward trends as of lately, some. Now, we're going to say, look, if it gets less or equal to, and we're going to type in that price. What was that price? 305.74, okay? Now, that's really, honestly, not that bad. The hardest thing about that order was just identifying at what price would you try to get in. Second, what if it were to pull back? And then second, what if it goes up? And probably the hardest part about that order is just changing the limit order to a market order and the data GTC. That's really not that hard. Really? I mean, you just click on it, okay? Now, the hardest thing about this is if you say, James, this confused me, I'm not a math person, okay? Well, don't worry, if we're not a math person, you're gonna see that we can read down there just to confirm what those notations are telling us, okay? Now, I'm gonna go save. We're gonna actually put a target price. Now, if I were to actually put a target price and say, where might this try to go to? Now, some investors would like to maybe try to target these old highs, okay? Now, are we saying that it can't go higher? Not saying that. We're just saying, look, this class is called trading growth and value stocks, so the most probable doesn't mean 100%, but some investors might just target that 329.99. Now, I'm going to kind of put that target a little bit less, 323, and then actually put that GTC, and then the stop underneath day to GTC, okay? Now, if we went back and said, where do we see a potential support area? Well, the last real support area we had was 290, about 294-ish. If we kind of put it right at the 20-period moving average, which is at 298, if we did it less 2%, okay, that would really be, in this case, if we set a stop a little bit lower, 292.87. And if we did that, 292.87, there it is, okay? Now, if we're talking about also putting it in terms of the capital amount that we're talking about and saying how many shares could this be, the answer is it's going to be about 21 shares of stock. Now, in our examples, a lot of people say, well, could the investor consider a derivative type of trade? Well, we always try to pick stocks that have a trend and liquidity on the stock, so that way if someone said, could I do a different type of strategy, that it might be possible. But if you start off with a stock that doesn't have that type of trend, price is even low, and the volume of the stock is low, then going to that next type of strategy, it's harder, okay, to maybe consider that type of strategy due to liquidity. Now, what I'm going to do is I'm just going to take this off and say, look, let's do 21 shares. Plus 21 shares, there you go. Confirm send. Here's the numbers on the trade. Now, what I want to do is I also want to go back to one of the other stocks that's been one that we have not talked about, but kind of maybe deserves to be brought up a little bit, okay? Now, remember on the stop, it's saying if we get to that price or less, then sell. But these targets, they're not going to be sold at both, okay? It's one or the other. But the targets are not, the target and the stop are not valid until the stock is purchased, okay? Now, here's the thing I want you to do. How many of you think in your life, besides me, you've missed some opportunities because you haven't been using these types of orders? Like buy if it goes to this price or lower, or buy if it gets to this price or higher. Would you say that there's maybe been some opportunity maybe left on the table? And it's okay. I think all of us could say yes, okay? Now, what I'm going to go ahead and do is send that order, and it's sitting right there. Now, the one that I want to really bring up is I'm going to bring up Disney. Now, here's the thing. If you were to look at Disney, what type of trend would you say that this is? Why are we bringing this up? Why? Kind of awkward, maybe a little bit. I mean, stock was what? Last year at 102, we're at 119 or so. We zoom in on the right-hand side a little bit, maybe the last couple months or so. And if we zoom in here, kind of looks like we're back up near the area of resistance. Now, I think sometimes as investors, we're so scared of resistance. But if you're up at resistance, which is pretty much at highs, think of it as it's close to breaking records or breaking records. Breaking records in terms of price is not a bad thing. It tells you have momentum and it tells you have a trend. Now, if we look actually underneath, what you're now going to notice is we had an old resistance right around 112 or so, okay? Now, I kind of want to bring something up. When you look at companies, you also want to kind of be thinking like, hey, is there another company that is Disney-like? Like, in other words, if I said JP Morgan, you would say Wells Fargo. If I said, for example, let's say Apple, you might say Samsung. Or if I said Apple, you might say Dell. In other words, who are their competitors? Or do they dominate that space? And sometimes what really happens in this case is some of these companies, they might be in a situation where they don't really have any main competitors because no one else really does what they do. Okay? Now wait, is that a bad or a good thing? Well, that's actually kind of a good thing if you don't really have any competition, or that competition is not on the same scale. Now, what I want to do here just real quick, and I'm going to pull this up, is I'm going to actually pull this up on Schwab.com. And what you're now going to notice is, let's kind of take a look at kind of where they've been. Now, the reason I wanted to bring this up is historically, when we go to the analyze, we go to fundamentals, kind of just want to look at the story that's been happening here, okay? Now, what you're now going to notice is when we look at these sales per share, the sales, for some reason, in the last 3 years, they've been pretty strong. And this kind of gives a little histogram of it, right? And you're going to see that really in 22, it popped pretty big. And then it popped pretty big again. And then it popped a little bit again. Now, Disney right here, kind of a company in the last 2 years, looks like they started paying a dividend. Double check me on that. But at least in terms of the data that I see, that's what it shows. And what you're now going to see in the last, let's say, year, we've actually seen on the earnings per share 272. Now, if I said, hey, what about Q1 25? They got 181 in 1 quarter. Now, before the investor says, oh my gosh, this is amazing, wonder if that's times it by 4 for the 4 quarters. You got to remember, some of these companies can be seasonal, okay? Bulk of their sales might come in a certain quarter of the year and so on. But that's actually pretty big, okay? We could actually go back and say, what was it in Q1 of 24 and so on. But overall, kind of seeing maybe a little return to some better profitability. Now, here's the thing about investing. Just because you don't go to Disney or I don't go to Disney doesn't necessarily mean that other people don't, okay? Now, what we're going to do is going to bring up the charts. And if we were to look at this, and I'm going to go to the 3-year weekly. If we look at this 3-year weekly, it's really just been going up and down, up and down. But what's awkward about it is it went straight down, but then it went straight up. Now, when you invest, nobody says that you have to put on the whole position at one time. Okay? You didn't do that. The first time you took out your wife or your husband, you didn't say, here's the keys to my car, okay? Here's the keys to everything, okay? You kind of just said, look, let's see how this trend goes. And then over time, the position size becomes a little bit bigger and bigger and bigger and so on, okay? Same thing with investing, okay? Same thing at your job. Day one you were there, they gave you the keys to everything, okay? Now, if we take a look at this, we're going to try to actually set a stop underneath this intraday wick. That intraday wick was right at about 115. Now, what we're going to do is we're going to do a half position. So let's say in normal times, we would say, hey, if I did a full position, it'd be $6,500. But if we did a half position, it'd be $3,250. Okay? Now, what would the investor want to see to consider adding to the position? Well, clearly, right? The investor might say, James, if you get above 120 and a half, that would be a fresh new breakout. Give me a crossover. Give me both moving averages turning green, and so on and so on, okay? But this kind of has a big continuation pattern. Now, in the weekly chart, we actually might say, well, it's at the resistance on the weekly chart. Noted, but remember, sometimes if the market is bullish, okay, like we've been seeing, some of these resistance levels might not hold. Now, what we're going to do on this, and I'm going to do this a little faster, I'm going to go to actually on Disney, we're just going to buy a half position. Now, if we're just buying a half position at the current price, right click on the ask price, right on the trade tab. We'll go to MU in just a moment to see what the earnings are doing, how it's reflected in some of the other semi stocks. Going to go to buy custom and going to go to with OCO bracket. Now, what we're going to do in this case is if we said, look, $6,500 is a standard position size, it'd be 54 shares if you bought a full position, okay? So if we kind of cut that in half and said, look, I'm going to buy 27 shares, okay? And this kind of also kind of decreases a lot of people when they get in, they're nervous, okay? Nothing wrong with testing out some entries to see if they can work, okay? Now, what I'm going to need to now know is what's a potential target and where is that stop. Now, if we go back and really take a look at this, that low from 2 days ago was right at 115.11. So if I go to 115.11 less 2% or so, it's going to give us 112.80. Calling all technicians. If you're going to put a target to the upside, where's the target? Now, I'm going to put that, for example, 112.80 right there, GTC, and I need to know that target there. Now, if I back this chart off, if I went back to this chart and kind of said what might be a continuation pattern, if there is one, you know, you could kind of say that there is even some shorter term flag measurements. This is probably where the investor sees a cup and handle pattern. They might say, James, I'm going to use good old tried and true Fibonacci, not taking extreme measurements, but maybe taking measurements that are a little less. Now, what I'm going to do is going to kind of play a little devil's advocate. I usually like to play this game, okay? I'm not going to go, oh man, I'm going to take it all the way down. When you take it all the way down like that, it's going to give you a big price target. But what if you said, look, I don't wear rosy colored glasses. I'm more of a realist. I want a greater chance that the stock might go to the upside. So the 161 is at 124.40. And if we said the 200%, that is going to really be right at where? Now, the 200% is not a Fibonacci. It's just really taking from support to resistance, taking that width in terms of a dollar amount, and all it's doing is it's adding on top of the resistance and giving us a price projection. Now, many technicians might say, James, I can't get in the trade and try to go for a $5 up move because my risk is more than that. I'm not even 1-to-1. So what we're going to do is we're going to set a target here right at 130 and change. Let's go 130.25, just right up in the area of resistance. Now, if you took this line and moved it down here to the bottom, yeah, it's going to give you a bigger price target, okay? When you have bigger price targets, might not be as likely to get there, okay? So what I'm going to do is I'm going to go back and put a price target at 130.25, okay? Dated GTC, that's good till canceled. These are stock trades, okay? Now, also want to kind of go back to just real quick, so some questions. Want to go back to one question that was asked. It was asked earlier, and I just want to go back to the beginning of the session. And it was from JP, and I want to kind of see if I can grab that. JP, would you mind in resending that question? It was on the institutional ownership. I just don't see it in my chat now. It's dropped off. Let me actually get down to this other one. Now, Art actually says, JB, it appears that CL has found some base. Well, this is kind of why we talk about mean reversion, right? When things go too, I mean, oil's not supposed to trend like a stock, like NVIDIA, for crying out loud. It's really kind of just meant to go up, down, up, down, up, down. When prices are high, the producers, they try to literally produce a lot to get the high price. When they produce a lot to get the high price, it can actually push the prices back down in the short term. When the prices are low, really low, producers don't produce as much. They don't make as much. And so there's a lack of supply, and then it pushes the prices up. So there's always this kind of game, if you will, of, let's say, prices being a little elevated from support, or being meaning at highs, near highs, and or let's say when prices are low and maybe trading where they could revert back to the upside. Now, Art, I would actually agree with you. I won't pull up the crude oil contract, but I agree with you, okay? On my X yesterday, I kind of posted that when you look at many energy stocks, they historically, for the last 20 years, have actually traded at low price multiples. And that's mainly because they don't have, if you were to pull up, let's say, a stock example given like Chevron, okay? And I'll even take one that kind of has more stability to it. Some of these bigger companies, they're actually on, they're not just pumping oil like Halliburton. They have refineries, they do natural gas, and so on. Now, if you look at, let's say, Chevron, okay, there it is, and you pull this up, the hard thing about, if you're a fundamentalist, how do you know what the price of oil is going to be? How do you know what demand is going to be? How do you know what OPEC is going to do in terms of the supply? My gosh. I mean, if you could nail it, it would be amazing. And what you're now going to notice is it's gone up over time. But what you're going to see is when investors see that there's a lot of risk where they can't model it, it's very hard to predict or forecast what the valuation is. And if that's the case, prices of energy stocks tend to be pushed down, okay, and trade at a lower multiple, okay? Now, when you look at some of these, let's say, energy stocks, and you look at, let's say, this and say, is Chevron that bad? Now, when it gapped to the upside, 152, it's at 143. But if you look at where Chevron is now, it's kind of right back to where the old breakout point was. So Art's comment was oil, which kind of overshot in the short term, kind of looks like it's come back down to the middle of the range. Agree? Some of these stocks now, they kind of appear to be back down to where they broke out from. Now, the other question is, I don't get the short interest on growth stocks unless it's a hedge for something else. So the comment was like short interest. So there are some investors, mainly hedge funds, where they find some companies that they actually think might struggle technically and fundamentally. Now, kind of very, very much talking about a niche market. These are not 401k funds, okay? This is not the state of California pension funds that are taking short positions. These are specific entities, mainly hedge funds, that really try to target specific companies and actually see if those stocks can't go down and try to benefit if those stocks were to fall down. Now, the biggest actually thing is when you look at, let's say, some of these companies, and you're talking about that new asset class, I want to go to that for just a moment. So trade number one we actually did was AXP. Trade number two we actually did was Disney. Now, some investors, they might be watching how some of these stocks might be reacting to that new asset class. A couple years ago, I can't say it, but let's say a couple years ago, there was a new asset class that came out, right? And if you kind of take a look at this, one of the brokers out there that's been exposed to it, at least one of them, okay, Coinbase, you ever heard of that before? You ever heard of Hood, okay, which also has exposure to that new product or new asset class. So some of these companies that are having exposure, okay, to that asset class. Now, here's the deal. There's some people that no matter what that trend shows, they're just going to go short, okay? It's built into them. I've been at this 25 years, and I know people, if the market was going straight up, they're bearish because they always take the opposite side of the trade. Now, not sure how that works out for them, okay? Remember back in 2017 when the market went straight up and they said next year it can't do the same, and it pretty much did, okay? And be very careful about that. I know about shorting. I know about bearish positions. It's a very niche situation, okay? It tends to be more tactical, shorter term, than something that is longer term in nature. So we try to focus on the majors. Like the majors is kind of the dominant trends, which have been more up. The trading bearish is more tactical, shorter term in nature, and it's just not a major strategy. To get those trades to really work, for the most part, you really need the market to go down. Like in 2000, 2001, 2002, 2007, 2008, early 2009. It's not to say that they can't go down in a bullish market, but it's tougher, okay? Now, I want to also go back to, so Palantir kind of has exposure, okay? Speaking of tech stock and also some exposure to that area. Been actually a grinder to the upside. I want to also go back to MSTR for just a moment, which also we've talked about historically in terms of something that was struggling fundamentally, but is trying to come back a little bit. Now, when we look at this, go to the Analyze tab for just a moment. go to the fundamentals. What people like is they like to see maybe like a turnaround story, if you will, okay? And you're going to see when we look at MSTR, and I want to just pull this up just real quick, MSTR, okay? When you look at MSTR, these numbers, they've really been bleeding red ink, as we can see by the parentheses, okay? And what you're now going to notice is in the last, let's say 25, if we go to the quarter, they really bled a lot, okay? Now, sometimes you can see this when new CEOs come in and they kind of have write-offs that affect the income statements, which affects the net income, etc. And if we take a look at this, one of the ones we're going to try to practice to see if we can't trade a little reversal. So when you look at, let's say, the stocks, so fundamentally not great, okay? It had one good year and then as of lately sold off again, but then today we're trying to really see a push to the upside. Now, many investors who are looking at Palantir, MicroStrategy, Coin, among others, okay, they want to say who has exposure to that new asset class as of a couple years ago. Well, here we go with MicroStrategy, and some investors might say, James, really when you think about diagonal breakouts, those are really, if you think about it, they're just bull flags in the shorter term, the intermediate term. Now, what I'm going to do here is I'm going to right-click on this price graph, right-click, and what I'm going to do is going to go buy custom with OCO bracket. Now, so when the fundamentals are tough, which they've been, the price sometimes gets pushed down. Now, it's just like say if you're going to buy a fixer-upper. You go buy this house that's a fixer-upper, and man, it's tough. I mean, you're probably going to be doing a lot of buying it's probably the easy part. Putting in the sweat equity is probably going to be the hard part, right? Now, what I'm going to do is I'm going to right-click on this chart, buy custom with OCO bracket. And if I do it with OCO bracket, we're going to look and see. Now, remember, just like we did with crude oil, we were watching crude oil and actually what those prices were doing, how it actually is correlated to stocks or a product. The same thing here with MicroStrategy, Palantir, Coin, and others. We're saying, hey, do these companies have a relationship or correlation to that new asset class? And what I'm going to do is I'm going to use this prior high, really about 420 or so, and I'm going to put the target right there, data GTC. Now remember, if we did, let's say $6,500, it's really going to give us about, capital-wise, have to figure that, there we go, 6,500. Take that off, there we go. And if we did that, it's going to be about 16 shares of stock. So we got a target. We need the stop underneath. Now, historically, if you go back and back test this, you think, oh, it broke out, this is support. You hope it's support. Many times, it's probably more the moving average that's underneath resistance that allows for the stock to fluctuate more and probably has a greater chance to endure potentially a higher low. If we take a look at that 372, which is at the moving average, 372.44, and what you're now going to see is if we do that, set the stop less 2%, 364.99. And if I put that right there, 364.99 right there. Well, it's actually had, so Josh, it's one that we've been watching that has had some relationship to it. Now, Palantir, if you go back to this, and this kind of goes back to the major point, what does this company do? Well, it actually does AI, okay? Analytics software. If we go, which has been, I mean, we'd have to have our head buried in the sand if we didn't hear the word AI, the two words, two letters. And now what you're going to see if we take a look at Palantir, software for intelligence community to counter terrorism, okay? Now, the reason why we also kind of pulled up, let's say, Palantir historically is we started talking about really cyber security, which when you turn on the news, you can't get 2 minutes in without them talking about security, okay? Cyber security. ZS hit a brand new high here today. CRWD hit a brand new high here today. Now I'm just going to give you an invitation. when you kind of listen to the news or see the news, think about which companies could benefit from the potential negativity. Some people get stuck in the negativity or what the news is. Good investors, great ones, say which companies are trying to give a solution, a product, to actually try to gain that control. Okay? So, but it is one we've actually been watching with that new asset class as well. Okay? Now, I'm out of my time here today. I want us to practice really those conditional orders. I also want us to keep an eye on stocks like GD, okay? That one, General Dynamics. I also want to keep an eye on a stock like GNRC, okay? These are kind of more basing pattern reversals. Could they get some lift to the upside? Stay tuned for Michael Fairborn coming up next at the top of the hour. Thank you, Connie Hill, for answering those questions in chat. And I'm out of my time here today. With that said, remember with what we discussed, it was done for example, illustrative purposes only. And also remember that investing involves risk, and this has been the class on trading growth here today. With that said, stay tuned for Michael Fairborn coming up next. Take care. Bye-bye.